Were you on fire, Lee?
Well, I mean,
You were in
in my
full flow, mate.
in my head, I thought it was fire, but I mean, we've got no proof now either. So right,
You can only
so
ever do something like that once, you can't repeat it.
yeah, yeah,
You got to be in the moment.
I'll stumble and fall now. I bet you any money. So I'll start with this again. So structure wise, so week in week out, obviously Ellen's gonna this is gonna be like deja vu for her because I was targeting her in the chat, but so we have multiple time frame structures running simultaneously. So obviously the red structure here, so I've already drawn it because I've already done this for the last 10 minutes. This is what I class as is most likely my 4 hour structure. So if we zoom out, we can sort of see that when we zoom out, it sort of blends into one price action of that's a push, that's clearly a pullback, that's clearly a push. This is starting to pull back now. Whether it's a 4 hour pullback or not remains to be seen, which I will get to shortly. So if someone could remind me about that, be great. So
Hang
yeah,
on. Remind you about what, Lee? I was just
um,
talking to my daughter.
whether this will be a 4 hour pullback or just a 15.
I'll remind you in 20 minutes.
Yeah, um, yeah, because I don't want to get off what I was sort of starting with.
Go on.
Uh,
Okay.
so yeah, so that's the 4 hour structure. So inside of the 4 hour structure, obviously I've already drawn these lines. So we've got the orange structure, which is obviously I'm still in the 4 hour, but this is still visible on the 15. I'm just doing it on the four so I can fit more of the structure on the screen. But it's basically my 15-minute structure is if I zoom in a bit closer, you can start to see more of the detail and the little pullbacks and things like that. So it's the same principle. Obviously, if you sort of zoom in, you can sort of see that this is a general push, and then this is an obvious pullback, a decent push, pullback sort of thing. I did cover one of the rules for structure while I was doing this as well. So I'll just delete this because it was from here where I was doing it. Not for any particular reason, but it's just where he was. So one of my only rules of structure is that when we obviously this is a bullish market, so it's the reverse for bearish markets. So what confirms the low on the pullback for this is obviously it's the lowest point the price pulls back to, which is this candle here and there. But that's not confirmed until this high is taken. Let me just change that color. So blue line. Until the blue line is taken. Yeah. So because it's one of the main rules for structure is because if price comes back down here, makes that low, it could come up, mitigate some imbalance in there, make a new low. It could do anything it wanted. It could do this. It could be an absolute mess, but it doesn't matter because the important points in structure are obviously once this is confirmed, obviously this leg's confirmed because it took that high, previous high. So that would cement that as the low. And this is the high, obviously, once it starts pulling back. Um, so yeah, all of this, what I've just drawn would be noise. It's internal. It's irrelevant because it will only become relevant if it did this and then decided to take the high there. Obviously, all this price action will be there, but then that would make this the low because that would then be the lowest point before the high is taken. And obviously, if it took the low, then we're still within this range. If it takes that low, then this is just confirmed as the high. So it's the same the opposite way around. And for a change of character reversal signal. So, like I say, maybe watch that a couple of times because that's quite a bit of information. So, um, So obviously we pulled back, make a new high, we pulled back, there was candle. So pretty happy that that's what I would class as my 15-minute structure at a glance. So inside of that, obviously, so that's the 15. I'm going to go down to like the 5 minutes to view my 1 minute structure. But what I'm going to do is I'm going to, let's say, bar replay from here, drop down, because obviously, before I do that, so if I view this on the 4 hour or the 5 minute, if I zoom into a certain point or anything like that, a lot of these candles are going to look exactly the same size. So at the minute, this looks like the red one looks like a really big structure. When I drop to the 15 or 5, the orange is going to seem really big. So it's just like you're zooming in as such, but everything's still as is. It still happened. It's still relevant. So what I've just done with the 15 inside of the 4 hour, which is what I just said last time, and I forgot to say that time, is on this occasion. So on this occasion, so we've got this 4 hour range. Obviously, we're in a 4 hour bullish. Yeah, we're definitely bullish. So on this occasion, we've got one swing, two swing, three swings. I don't know. Yeah, no, four swings. So on this occasion, we've got four 15-minute swings that creates a 4 hour leg. Yeah. So with that principle, we can sort of assume that maybe we're going to get 4, 5, 6-ish swings that maybe on the 1 minute that create the 15-minute as such. Now I'm only using these time frames because they're closely multipliers of each other. So this is it's sort of useless, but it's sort of why I picked the time frames I picked is because to start with a 1 minute, if you times that by 15, you get 15 minutes. If you times the 15-minute by 15, you're just under 4 hours. So I rounded up to 4 hours. So the multiplied of the same things, bit irrelevant, but maybe it shows. Maybe it's done me well. So I don't know why it's, but I just like the fact that there was sort of evenly multiplied over time frames and the good time frames to look at. So that's why I always refer to the 1:15 and the 5, just because they're about evenly spaced out. So as I was saying, so go back over here. So let's pick one of these 15-minute legs. Do this one down here because it looks relatively clean. So I'll do this pullback. It looks clean and it's just go up to the 10, just so you can see more on the screen. So obviously these look quite big on, quite smallish on the 4 hour time frame. Obviously on the 10, 5 watch has been on, look relatively small. No, big now, sorry. So we can sort of start to see that this is probably like a 1 minute structure. Yeah. So I'm just trying to see. Yeah, this just about takes it. So that technically could be a valid low. Pulls back. And I'll change the color of this in a minute so it's not too confusing. That doesn't, this little one here doesn't take it, so maybe argue that that's so green's my 1 minute stuff. But as you can see, we've got 1, 2, 3, 4, 5, 6, several 1 minute pushes that creates the 15-minute structure. So this is why I always say we've got multiple timeframes running simultaneously, because it's just how the market seems to be made up. I don't know if there's any reason for it, but this is why. Yeah, that obviously that's just a good example of the three running simultaneously at the same time. So, I mean, if I zoom out to the 4 hour, you probably can't even see this green line structure. Sorry. Maybe, but I don't think you'd be able to mark that as a structure if you want on the lower time frame. But yeah, like I say, as you can see, that is just in that screen there. There's three. So you got your 4 hour long, 15-minute pullback there, and inside you can see the little zigzags of what I would class as the one. Right. So that's that structure briefly in a nutshell. As I said, obviously, when a structure is made, the high and the low are the important points, and they are the working range until the high or the low is taken. So this is where I'm going to talk about this. Whether I think well, I don't know whether it's going to be a 4 hour or 15-minute pullback, but the best signal that we can get is for whether it will be a 4 hour or 15 is if it takes this 15-minute low. So if this eventually comes down, takes this low here, just draw that out. Right, so if price, obviously, some point this week, maybe next week, if price comes and takes this low, then we might well start a 4 hour pullback, because that would mean that then we have broken the 15-minute. Turn that orange because it's 15-minute low. So if we from here come and take this low here, I'll then expect a pullback into something and then continue a trend downwards until it's done what it wants to do, basically mitigated something. Obviously, the 4 hour might pull back. If it's just a pullback, then I wouldn't expect it to come anywhere. I wouldn't expect it to take the low, maybe not even come quite so far deep. It might mitigate something a bit up in one of these like 15-minute lows and then continue long. Obviously, we don't know until things happen. We do believe the market tells us before it's going to do it, but I think a lot of us, especially in your earlier days, we believe we're missing out on the trade if you're going to wait so much. But trust me, you're not. You're just getting better confirmations. So don't know whether this is a 4 hour pullback or just a 15-minute pullback. The difference will be is what it happens when it comes down, so possibly somewhere around here. There's a big imbalance in here. So I imagine it'll come down there and it might obviously just do a 15-minute high from there. So there'll be signs that tell us which one it might be earlier than obviously coming and taking the low and not. And this is where multiple time frame structures becomes very important. So if we come down here, so like if we follow this this line here, the last one I've drawn. So obviously we're pretty much trending downwards on the. I don't know what this is. I don't know whether I count that or not, but let's just say that that's the 1 minute structure. If we come down here and we get a 1 minute break, that's possibly an early signal that it's going to be 15-minute continuation rather than a break of structure. Obviously, it's not guaranteed, like nothing in trading is, but if we get a good 1-minute break somewhere from, say, this order block here, then there's a good probability that we are just going to go and make a new 15-minute high. The odds on that, obviously, I don't know the percentages, but obviously could lose it, but yeah, this is why I'd use when I'm looking for 15-minute structure entries, I'm generally waiting for a 1-minute structure confirmation first, which is why I'm always saying 1 minute change of character, 1 minute change of character, 1 minute change of character. And if we don't get the 1 minute change of character, we might just get.
Lee, do you
Yes.
enter your trades on the 15-minute break of structure, or do you wait for that 15 time frame?
So it will depend what appears. So this is why I wanted to talk about this. Like when this chat popped up, I thought, yeah, this is sort of a bit ideal. So obviously, you asked me at what point. I think what did you ask me earlier? So about when would I get in or something? I can't remember now. So, but basically, this order block and push away possibly leads to this 15-minute high being taken. So this order block is more than likely a very important order block.
Okay, because it's broken the structure there.
Because it's caused a continuation break. So, but obviously, I would never advise you to just get in on that. This is why I would say you would wait.
Yeah.
And at the minute, I'm only anticipating once we get the break to the upside on the 1 that we would then very much likely get the 15-minute continuation structure as well. So obviously, because the 1 minute makes up the 15 and the 15 makes up the 4. So I want the 1 to change first, because this is, if we zoom out a touch, right, we are 4-hour bullish. We are 15-minute bullish, but in a pullback phase, yeah? It's not taking the low, so it's just pulling back at the minute. If it takes the low, obviously, then it's a change of character, and I'm looking for sells, but probably to pull back up high to then sell lower again. So I've got what I'm saying now. So I'm just going to get a drink as well because my mouth is dry. So bear with me a sec. Covered a lot of words in that 20-30 minutes, so yeah, sorry, what can anyone remind me what I was saying last? I can't remember now. No. Yeah, so basically,
yeah, you were talking about that POI. Sorry, I wasn't paying 100% attention.
No, it's fine, mate. Yeah, my mouth was dead dry, and I was starting to think about other stuff as well. Yeah, so what? Yeah, I remember thinking now. What sort of presents itself will decide whether I'm happy to obviously take a buy from that zone. So the first thing I would want to see is, like, say, a 1 minute break to the upside. But what I don't want to see is a trap, basically. So if price, say, I'd be very keen on watching, say, maybe not that one. This is just purely example, so just delete some of these, so just so don't confuse everybody too much. Right, so what I don't want to see is, obviously, let's say price comes from here, it's just trending down, doing its thing on the lower time frame, whatever. don't want it to sort of come deep into. I don't want it to come deep into the or close to this low and create a third touch on, say, this trend line. That would make that. I mean, it's a bit messy, but you can sort of get the idea. I wouldn't want them two touches and another touch down here to become a perfect trend line, because we might get a false change of character at that point. We might get a break to the upside as a trap. Everyone would be thinking, oh, nice, we broke to the upside here. But if you don't see that it's made any liquidity, then obviously that will trick people into buying from there after a change of character, because everyone would be assuming it's going to do something like that. When if the liquidity is there, it might pull back, like say, change of character, and then smash everybody's stop losses because they've not spotted trendline liquidity. So that's what I mean when I say depends what presents itself, because liquidity, which is likely to push price below seller swing low or my point of interest, is then sort of telling me that it very well might want to break the low, which means obviously my stop loss would be above the low. So depending on obviously what presents itself. So they're things that I'm always trying to look out for, not become part of liquidity. So that's what I was sort of maybe expecting from here on the 1 minute, like say, touch a blue box. Obviously, I'd need to refine these zones or whatever. I'm just I've vaguely marked it up purely for this. But like I say, it would be nice to see price come in there, 1 minute break to the upside, come mitigate an order block, and then buy up. If it does that, and then like I say, 15-minute continuation. If it takes the low, then I think we'll get a 4-hour pullback, and then the decisions on how far do we think it's going to pull back. But the same principles of why I would mark this one apply to all the other possible reversal points below it as well. So this last structure is, so this one here, obviously high and low there, marked with the orange line. I would sort of say price is sort of protected by the highs and the lows until it's not. So, like I say, unless there's liquidity below it, I would sort of anticipate that it's going to reverse from probably here. Like I say, if it fails to do that, then we've got other options below, because something in here might be responsible for this high being taken. It could just be low, to be fair. That one could be responsible for this high being taken. That one's high, responsible for that one being taken. There's something there that's responsible for this one being taken. See, the push start comes from down here, but it pulls back, does something, then this push up here. But this might have mitigated that. Obviously, I've just marked it in case. Because if it takes that, it's got to come into something possibly in here to mitigate something. I'm just chucking out ideas of areas that might be good if it does take the low. Just so you've got an idea of why I would sort of mark these areas and sort of what I'm thinking. Obviously, that's current live price action, so it's for untrained eyes. It's maybe a little bit difficult to spot when it's going to happen. So, as I say all the time, I'm sure you've all heard me moan about it. I always say go back to previous data. So, even if we just scroll back to this 4-hour pullback here, again, you can see there's a high here. It would have been a 15-minute high. Order block in here caused that high to be taken. Price comes back and mitigates it. It takes a 15-minute high, and then it comes back and obviously it mitigates something in here that causes the actual break by the looks of it. I'm not getting marked, it's just I can sort of see it from here. But we get, when we mix that in with structure and things, so obviously that's just, I've just mentioned that POI and why I would mark it, obviously took that high. There's multiple opportunities to get into some of these trades, so just basing around structure. So obviously 4 hours bullish, we pulled back a decent whack of that whole structure. We've got a reason for a point of interest in there. We come in there, and I'm assuming we probably do a 1 minute change of character and then a mitigation of some sort. Right. So there, I think. I pick anyone else. That might be that there then. Fast forward this, I'm not actually going to. I don't think it comes back. Yeah, marked that for some reason. Can't remember why. I don't think that's the one high anyway. It's up here. That one there. It's higher. It's obviously, I was saying earlier, it's the highest. Obviously, for bearish, it's the highest point it pulls back before new lows created. So that'll be why. I don't quite wait to the idea, to be fair, that one, so I don't know why I've got that marked. Maybe it's because of that high there. So, yeah, not quite the 1 minute, but it's taken another high. Maybe the other high is the high that was of significance, not the one I got marked. But basically, this little order block here causes the high at the black line to be taken by the looks of it, that one there. And then obviously it comes back and mitigates it. So that's a super early entry on a 4 hour pullback low. So that's this point here. Been in here. It'd have been this, yeah. So it would have been, by the looks of it, I think it'd have been in at somewhere in this. I think it was this black line here. So that's a super early aggressive entry, but obviously that's just a 1 minute change of character in a 4 hour swing. So there's if you get in that early, you never know if it's actually going to take the 15-minute high. Obviously, it does eventually, as you can see. So, I mean, chances are, unless I've seen another sort of entry, price pulled up to this high in there and then started pulling back, I would assume I'm going to get taken out at that point if I'm still holding it. But like, it depends on like the rest of the analysis. Like, you could also obviously, if you're back tested enough and you're comfortable and going, yes, I'm pretty sure that's a high probability reversal point in this order block. Like I say, it's taken high. It's about 50% of the structure swing. From there to, yeah, it's over 50%, so 50% being here, so it's just below the 15. I think I've heard people say 50% is a valid pullback. I don't know if I agree with that rule or not, but it's about there in it, you know. So yeah, it's a pullback. It's enough of a pullback to tempt me at least. And then obviously, so that's the first entry on a 4 hour pullback, because obviously we're going to want the higher time frames at least in our favour. We can sort of work around maybe the 15 sometimes, but so once price takes, so we've just covered the first aggressive entry. So we take this high here. So price comes back after it takes the high, comes back in here. We probably get a 1 minute break of structure in here somewhere. And then another, this is possibly mitigation in here. So that's the second possible entry once we've confirmed 15 is turn bullish. So that's two or three possible entries just off this, what I would class as from this sort of zone in this reversal of the 4 hour. Obviously, the 4 hour turns bullish again, but we don't know obviously until it goes. But with a bit of anticipation and market knowledge and structure knowledge, obviously things like order blocks and taking up liquidity and things like that, we can build up a good estimated guess of whether we think it might or not. Is there any questions, peoples? I'm going to take a drink again. Nothing?
No, no questions for me, Lee. Thanks.
No.
No question. It's really helpful. I thought that was really good.
Yeah.
Going forward that.
Yeah, nice, mate. Appreciate that.
And the problem is, I don't zoom out enough. I'm sort of zooming in too much and not seeing the overall picture.
Yeah. It's a common issue, mate. I think we all get stuck on. So so a lot of people do get stuck on like the lower time frames and mainly like stuck on the 1 minute and things like that. But so I'm a very picky trader, so I'm more than happy to wait for this order block that caused this high to be taken on the 15 when I know that the 4 hour is. I mean, if I bar replay at this point here, ignore all these boxes and the zigzags past price here, but we could relatively assume that the 4 hours extremely bullish. It's coming close to the high. Like as long as you don't get in at the high of say one of the 15 or 1 minute structures, we can sort of safely assume if we get in a reasonably safe pullback level on like a lower time frame, like you would be relatively safe in saying I think it's going to take the 4 hour high that we've got, which obviously here it does. So I'm more than happy to wait for these. Like I wouldn't say just the 4 too much because I think the 15's enough. But I like to know where I am in the 15 minutes. So obviously, because I said earlier that there's four pushes on this 4 hour structure, maybe more to come depending on what happens when it gets down here. But there's four or five at the minute. So just based on that and with a little bit of assumption, we could also say we're past this high 4 hour high by a decent bit now. We could well pull back on the 4 hour and have a decent pullback to wherever, let's say to there. We would be within our right to go. I think we're due 4 hour pullback. So 4 or 5 pushes, we might get three or four smaller pullback pushes on the 15. But like I say, I'm just happy to wait for these major areas and catch real high quality good moves. I mean, it doesn't even have to be huge numbers. It doesn't matter as long as, like I say, if this pulls back into here, does a 1 minute change of character, I'd be more than happy to take it relatively high into this swing. So yeah, I mean, if this pulled back now up to that, up to this, I don't think I'd be keen on buys. I don't know what I'd do, to be fair. I don't know if I'd buy or sell, but yeah, I think picking where you're possibly trying to buy from is, or sell, obviously, where you're trying to trade from is, you'd be well within your rights to go from there. And obviously, there's a saying that everybody's heard of, which is buy high, sell low, which is fact. That statement works if the market's trending in the right direction, I suppose. So buy low works if you're in a bullish market. So you would obviously just marking these zones randomly because I'm certain there'd have been trade from all of these like 15-minute lows as such. So buying low in this structure comes, mitigates it. Does a 1-minute break up here, comes back, mitigates it. So this very low here would have been a buy by the looks of it. Was down in this low here. It pulls back into it and buying low from this, because this would have been live range at that time. So buying low in this structure is a good idea. So it's the same pretty much all the way up, apart from this structure here. But it's just one of them that maybe didn't give an opportunity. Maybe that's an entry. This pullback taps in the entry for this one here or something that I just hadn't marked up. And then obviously the same would be in reverse. So if you're just selling high, obviously you want that to be in a bearish market. Sort of the only other things I could add to any of this, which we sort of covered a little bit earlier, is just liquidity. So I believe structure is king. You can pretty much, with a little bit of knowledge of order blocks and imbalance, I believe you could easily, not easily is the wrong word. You could trade pretty much based off mainly structure and then a bit of knowledge, like say on order blocks and imbalances and things like that. But yeah, I also use liquidity as a tool to identify where these, anticipate where these reversal points might be. So, like I said earlier, if this creates a trend line somewhere in this, and then sweeps the trend line, and that sweep takes it into this blue box, it's a great sign for me. Then all I'm waiting for is a break to the upside before I then want to see a little pullback into an entry zone. And then I can see if I can find a better example as well. Find another chart with some. Good example, that one. Jesus Christ, some of these are nuts. Here's might be a good example. So obviously I've got me sort of 4-hour, and so red's possible 4-hour structure. Sort of anticipated a new 4-hour high on this. I mean, I anticipated that May time, so mid to early May, I think. Obviously you can see there's some orange zigzags going on as well. So obviously price on the pullback of this 4-hour, obviously inside that is the 15-minute zigzag, as you can see here. Creates a low here, this low on 15 and the 4-hour low. So these 4-hour and 15-minute lows, very, very major moves as long as you catch like the 1 minute. change of character things and that going on here. So creates a low here, it breaks the high up here, comes back, pulls back and fills the imbalance in here. I can use liquidity because we've got some. So obviously I think this one wicked me out because it come for something else left in there, which is irrelevant. It don't matter. But basically, what I'm trying to show is I'm going to settle for that. I know it's not good. Mac's going to pull me out on this, but say it's not good enough. But oh, there you go. That's better. So we've got touch, free touch trend line there. Like now that I was obviously anticipating a major buy from the mitigation of this because we've made a low, it's in a decent position because I don't think it wanted to come lower than this 4-hour low. Obviously didn't want to come below this 15-minute low, I don't think, or it mitigated the lowest imbalance in this 15. So there was a good chance at the time that this was the 4-hour low and it was going to be the new 15-minute low. So from that point, we've broken the 15-minute high and then we've come back, mitigated something. So where liquidity sort of fits into this is obviously we've built up a trend line here. So the different forms of liquidity are trend lines, major highs and lows. So major high, so basically all these 15-minute zigzag highs and lows you can sort of see they're what I would class as major highs and lows. There's major highs and lows on different time frames though. So also obviously on the 1 minute it will have its own major highs and lows. But it's basically like the structure that I've been drawing for you. So that's what I class them. And then there's equal highs. I don't see too many equal highs, so I'm not anticipating I'll spot anything, to be fair. But we all know what equal highs are anyway. But yeah, I've got that wick me out, and then when I'm just a tad lower than where I had me order. Yeah, so liquidity. We can use it as a tool to go, like I say, because I didn't spot this, but if I had, I would have been thinking, yeah, we're on the money, we're going to pass. I'll extend that. I'd be thinking we're going to take that, tap into what was my entry, because what liquidity is, obviously, whether you believe it's other people's money or orders or whatever it is, the only thing I can sort of tell you that is pretty much guaranteed about liquidity is that price wants to pass beyond it. So that doesn't mean if it's going to reverse or continue in the direction. It's just we just know that price wants to pass beyond it. So what happens after price passes beyond it is what I would always recommend we are looking to do. So, like I say, price past this blue line, it sweeps it here. Obviously, this is worth noting as well. Like this little V-shaped sort of thing going on here, like quite a sharp push down, push up, it's a very common sight. They all look obviously different, but this should become familiar. And obviously, as we can see as well. So this is where I made my mistake, obviously. So price trending down makes a low. Highest point, it pulls back, makes a new low. Price breaks the high there. So once it took me out, I should have been paying attention to that really. Obviously, this was my entry, I believe. It wicked me out but it did tell me, and I've only just spotted it. It did actually tell us because obviously structure highs, major highs and lows of liquidity. So at that point, I suppose that does close above it there. And what do we get? This push here that causes that push there. We've got a little something in there, no doubt. So low to the creation of imbalance. I think I'd have been there. I was looking. Tiny little bit of imbalance here. There's also in the 10-second. This candle would have interested me as well because when something happens in here, we get a bit of an up push. Down candle's nice to look at there. So, yeah, I think my entry would have been somewhere like that if I was watching it. As you see, further down here. Been quite a big stop for me, I think, to be fair. But turn that red. But as you can see, because I was anticipating a new 4-hour high, we're not quite there yet. I mean, that would have been a monster move. It's blundering here because he'll be getting a semi on at this.
Now he's worn out.
Should I post it?
Yeah, he does 1 to 2s now, like Ellie. He's changed.
Yeah, we'll see.
Sorry, we shouldn't say that when it's recorded.
I hope he has, because he spends a lot of time in my inbox, mate, and then goes off and does his thing again.
I'm not going to say a word. Right.
Yeah. But yeah, like I say, wick me out, give another confirmation. I should have been paying attention. It's reached whatever that is. So small. 98th hour. Like I say, I was anticipating a new 4-hour high, so I think we'll get a pullback soon on this as well because I'm a structure guru. We've had obviously 15-minute break. Let me just draw this so you can see it. So 50-minute low, breaks above here with that there, comes back, mitigates, took the high, pulled back, took the high, pulled back, took the high, pulled back, possibly took the high, pulling back. So we might see a 1-minute break, change of character to the upside coming up. Piss off. Damn it, I hate these. So much delete it. Spread hour, market open. I hate spread hour and market open price.
Total pain in the ass, isn't it?
Yeah, it's never helpful.
I
Never
get these
helpful.
beautiful trend lines, and I have to go. Oh, can I
Yeah,
use that one?
yeah, yeah.
Oh, I'm so proud of that.
Yeah, it was, and they're often perfect trend lines as well.
They're always spot on.
Yeah.
Yeah. Or an entry. There's a beautiful entry, and it's right by spread out, and you go, well, I don't know what to do with that. You know,
Yeah,
what the
same,
fuck can I do?
same. See this.
I know what to do, which is go and look at something else and
Yeah,
don't sweat it.
yeah,
But it's
yeah,
just you're so proud of yourself. You're like sweating buckets to find this
yeah.
setup and it's spread out. I was almost thinking of writing an indicator,
Yeah.
which wouldn't be hard, just to draw little box around spread hour
Yeah,
so you
yeah,
can see them. Yeah.
yeah. But yeah, basically, I think, like I say, because we're aiming for a new possible 4 hour high, I think we'll get. I think we'll get something mitigated. It's somewhere down here, maybe even where it is now, sort of. We might hopefully sort of trim down a little bit, decent change to the upside, mitigation of an entry, and then continue with that. It's a 15-minute structure on it, so change that to orange. But yeah, this is why I say the multiple time frame structures running simultaneously are important, because on this 4 hour possible new high, 15-minute is bullish, trending upwards. So if this is pulling back and we get an early sign, which is the 1 minute break to the upside, then there's a good chance that might be the start of the new 15-minute push to take this 15-minute high. So remember this sort of drawing. Obviously, this is just my sort of anticipation of a 1 minute structure. Breaking above the high is what's important. So that's a fair signal that price might turn long again. Because at the minute, obviously, this is 4 hour long, 15-minute long, but we are 1 minute bearish. So we want the 1 minute to line up with the other two higher time frames, and then we have possible big monster moves. Like I said, I've just explained that obviously given opportunity for nearly a 1 to 100 for a relatively simple. I mean, well, I believe it's simple, but because I understand structure. Is there any questions, guys? I know that's a lot of information.
No, good. Thank you. I need to watch it back tomorrow. With the, I
Yeah,
like to watch with my own chart on the screen as well. When I can
yeah. I mean, I imagine it's going to be one that I tell everybody to watch back as well, because I feel like it's been a good one again. So
yeah, there's lots in there.
I'll
Excellent.
new messages. Yeah. Right. Cheers, guys. I'll call it there then.
Thank you.
Cheers.
Thanks, buddy.
Thank you.
Bye.
See everybody.